Hey guys, so in this video, I'm going to be going over my top 5 stocks for this month. I've done all the research for you guys, and this is the list of 5 stocks that I think are going to see amazing growth. Make sure to watch all the way through to get my full analysis for each stock. I'm going to go over some of the key numbers for each company, and I'm also going to talk about my thoughts on how they're positioned right now, why they're undervalued, and what's in store for the future. Are we going to have a GameStop type situation where the stock just goes wild and retail investors beat up on hedge funds? Who knows? Watch this video and we'll see. Now, if you like my analysis, go ahead and gently tap that like button because it really helps out the channel. And let's get right into it. All right, so first one on this list is going to be a company I already mentioned earlier on in the week if you watched that video, and that is going to be Meta Platforms. This is Facebook. They just rebranded their company to Meta. Now, I'm not necessarily the biggest fan of Facebook, to be honest with you, but when it comes to investing, you have to take your emotions out of it. And realistically speaking, Facebook, Meta, whatever you want to call them, has positioned themselves to take advantage of the metaverse unlike any other company. Now, keep in mind, guys, I don't give financial advice on this channel, and these are buys that I'm considering myself after doing a bunch of research, but nobody, and I mean nobody, knows what's going to happen to any of these stocks in the short term. Long-term investing is a completely different story. So anything that I recommend, I only recommend if you have conviction that you are going to hold that stock in the long term. So when it comes to Meta Platforms, you see that year to date, they are down quite a bit. Pretty much all companies are down, especially growth stocks, which Facebook is definitely a growth stock. So they're down about 12% since the beginning of the year. But if you zoom out a little bit, go back 1 year, they're up 9%. Go back 5 years, they're up 125%. So that's a 25% gain every year. If you look at their market cap, it's totally ridiculous, 824 billion. You look at their PE ratio, it's about 21, which is very healthy for a tech company. If you look at their earnings per share from 2018, it was $7.57. In 2019, it was $6.43. In 2020, it was $10.09. And in 2021, it was $14. So it's been consistently getting higher and higher. And with their moves into the metaverse, you could see that keep on growing. So that is a very healthy earnings per share. Now, when it comes to the analysts on Yahoo Finance, I always like to see what they say. And they have this as between a buy and a strong buy. That's actually the area where I really like, because usually when they have it as a really strong buy, that means people are a little bit too bullish on it. Now, besides their numbers, one of the main reasons why I'm so high on this one is the fact that, first of all, they're already making about $3 billion a year from the metaverse. So many people think that the metaverse is really far off. It's not going to really take off for another 10 or 20 years, but we're already seeing them make money from it. On top of that, they are without a doubt one of the most well-positioned companies within the metaverse ecosystem. On top of them being extremely well-positioned, they also have a ridiculous amount of cash flow. One thing that's really risky about the metaverse is it's pretty uncharted territory, and so I think a lot of companies are going to be basically burning their money in many cases when they try to launch. Now, this isn't necessarily a bad thing. A lot of the time you will make mistakes. You're going to have some failures in order to get the big successes. But if you're a smaller company that doesn't have as much cash flow, it's much more of a risk. Facebook, on the other hand, has billions and billions of dollars coming in every single year from Facebook as well as Instagram. So they are not going to have to go and try to get funding from investors or anything like that. They can do that if they want to, but they are going to have plenty of cash to spend on acquiring other companies, for one, and also taking risks. And then the fourth big reason why I think Facebook is going to be successful when it comes to the metaverse is they are going to be able to advertise it on their platforms. So when it comes to NFTs, gaming, cryptocurrency, the social media side of it as well, they are going to be able to advertise that on Facebook and Instagram. And by the way, guys, one of the easiest ways for beginners to invest in stocks, because let's be honest, dealing with stock brokerages is a huge pain in the butt, is to invest with Moomoo. And you can find my link down in the description below, and they will actually reward you by giving you several free stocks if you fund the account. They have some of the most ridiculous promotions I've seen. It's actually even better than like any other promotions for new people. So you can get up to like $2,000 in free stocks from them. All right, so next one on the list is going to be Allegro Microsystems. So Allegro basically makes advanced semiconductor related devices. And of course, we've heard about the chip shortages over the last year that have been plaguing basically everything from cars to phones. So they have seen demand for their chips go up a ridiculous amount over the last year. Now Q4, they did extremely well. They outperformed expectations. However, over the last month, just like many other different stocks, we've seen a big time slide. I was actually planning on doing a video like this last month, but I saw a lot of volatility in the market and I thought there's a very good chance that we're going to see a big time drop, and that's exactly what happened. So year to date, they're down about 30%. And if you look at 1 year back, they're down about 12%. And if you look at their maximum, because the company basically IPO'd in October of 2020, they are up 39% still. So we have seen a huge drop over the last month or so, and I think it's due for a reversal. Now here in a few days, they're going to be releasing earnings numbers, so that's going to be interesting to see. Earnings per share is 0.24, and just last year it was 0.15, so we're seeing that go up a lot. And when it comes to earnings per share, you basically just want to compare it to the company's past performance. So we're seeing that going up, and that's really all that matters. Now, when it comes to what the analysts are saying, always interesting to look at them. It's somewhere in between a buy and a strong buy, and that's usually a pretty good place to be in my opinion. If it's too much of a strong buy, I think that means the market's a little bit too bullish on it. And the stock's at $25 right now, and we're seeing a market forecast of $40 in the next year. So that is excellent. That means it would go up about 56%. Now, we've also seen a lot of institutional investors making plays on Allegro. So that is my pick for a mid-cap stock that could do really well. Next, we're gonna go over a small cap stock that I could see doing well. All right, so the next stock we're gonna go over is Daseke, and they are in the trucking and logistics industry. Now, this is a small cap stock. They have a market cap of about 629 million. Now, we've seen all of the logistic problems we've been having all over the world since COVID started, but Daseke over the last few years has been outperforming expectations. So the last few years have really separated the wheat from the chaff when it comes to companies who truly are good at logistics, and Daseke has really shined. Year to date, they're only down about 0.49%, even though the rest of the market is down over 15%. So they've really held steady over the downturn. If you zoom out and look back 1 year, they're up 83%. And it looks like over the lifetime of the company, they're up about 6.42%. So this is one of those companies that I think is going to do really well, even if we end up going into a pretty bad economy. If you look at their PE ratio, it's 13.12. Now that could mean the company's outperforming expectations, or it could also mean that they're overvalued. Their earnings per share is 0.77, and we've seen that going up, and also the estimates for earnings per share are very high over the next few quarters. The analysts tend to think this is kind of a weak buy opportunity, and from my experience, from what I've seen, usually when it hovers around 2, so somewhere between like 1.8 to 2.2, somewhere around there, that's when it's a pretty good buy opportunity. Now, it's about $10.16 per share, and the forecast is for it to go up to about $13.75. So that would be a 35% gain over the next year. So they made a name for themselves during the pandemic when a lot of different companies were really struggling with logistics, and I think that that is going to pay dividends in the near future. Now, I know this is not the most exciting stock in the world, but this is one where it could be really good, especially if we end up going into a bear market. Next company on the list is a little more exciting. It's going to be Roblox. Now, if you look at the year to date, Roblox is down by 40%. Yes, it dropped by 40% in January. If you zoom out a bit, you go back 1 year, it's still down by 15%. So this is one of those stocks that, in my opinion, was overhyped for a while. That doesn't mean it was a bad stock by any means, it just had a little bit too much hype. Now, this one was released in March of 2021, and you see on the first day it was $69. Now it is $58. So it's actually below what it was on its release date. Everyone's kind of freaking out about this one. Everyone's, probably trying to get out of it. This is the time, in my opinion, where it can present a good buy opportunity. Now, this one does have a market cap of 33 billion, so it is a large cap stock. However, it's a large cap stock that has a lot of upside, in my opinion. Now, the reason I'm excited about this company is very similar to Facebook. They have positioned themselves to be one of the biggest players in the metaverse. During 2021, the daily active users went from 32 million to almost 50 million, and this was across 180 different countries. Lil Nas X did a Roblox concert that had 33 million viewers, and all of this is possible because the way that Roblox is positioning themselves is very similar to the way Amazon as well as YouTube position themselves. Instead of trying to do everything themselves, they're working with creators and they're making it possible for creators to make money while they make money as well. So creators have the ability to create their own games and their own in-game items. Very similar to how you can sell on Amazon or you can make a YouTube channel. And if the channel ends up making money, you win and YouTube also wins as well. We've seen this business model work really, really well time and time again. Now, when it comes to the analysts, they're showing this as a 2.1. So they're recommending this as kind of like a weak buy opportunity. And like I said, this is kind of exactly where I want it to be. And it's at $58 right now, and it's projected to be $116 in the next year. So that's actually 100% upside. So they're saying that it's likely going to double in the next year. That's a pretty good forecast, especially for a large cap stock. So this is definitely one I'm keeping an eye on. For all these stocks, make sure you don't go all in on them or anything crazy like that. Make sure to diversify your portfolio. Also dollar cost average into these because we don't know what the market's going to do right now. It could keep going down or it could rebound right away. Now, if you've done your research and you're really excited about the metaverse because it could potentially be bigger than social media and maybe even the internet, then there were several companies that I mentioned there that could be good investments. But if you don't want to take your chances and you want to diversify your investments a little bit more into the metaverse, so the Roundhill Ball Metaverse ETF invests in all different types of companies that are related to the metaverse. Whether it has to do with the computing power that you need to support the metaverse, the networking or the bandwidth that you're going to need, the virtual platforms, the payment systems, the content itself, or the hardware. They've invested in a ton of different companies that have positioned themselves as some of the leaders in these different spaces. So this is a great way if you are bullish on the metaverse, but you don't necessarily want to do a bunch of research or figure out if a company's undervalued or overvalued, you can just put your money into this ETF. Now, year to date, it is down about 21%. Most growth stocks are down right now. And of course, a lot of people are freaking out, they're dumping, but this is the time that you want to possibly consider buying in. As Warren Buffett would say, you want to be fearful when others are greedy and greedy when others are fearful. Now, it's only been available since July of 2021, and it is down since it was released. The first day it was released, it closed at about $15.12. And now it is down to $12.04. And when it was first released, I thought that it might be a little bit overvalued, and it looks like I was right. Now, if you want to diversify your assets even more, what Warren Buffett recommends you do is invest into the S&P 500. And one way you can do that is to invest into something like the SPDR S&P 500 ETF Trust. This is actually the largest ETF in the world. And this is basically going to help you diversify your money into the 500 largest companies in the US. So these are all large cap blue chip stocks. Now, year to date, it is down about 9.5%. We just had a market crash, so that's nothing to be surprised at. If you zoom out 1 year, it's up about 15.4%. And if you zoom out 5 years, it's up about 88%. So that's about, 15% per year or so. So I am a huge fan of index funds. And in my opinion, if you're not somebody who is really into personal finance, you just want to find a way to get your money into something. You don't really want to spend a lot of time analyzing or getting really good at it. Index funds are probably the way to go for you, and ETFs are a slightly different version of an index fund. I've talked about in other videos what the differences are, but they essentially do the same thing. They help you diversify your money throughout a bunch of different companies. So this is a super, super safe investment, and if you want to make it even more safe, what you can do is dollar cost average into it. And that's where you basically invest a smaller amount of money in predetermined intervals. So for instance, you could invest $100 every month for 10 months instead of investing $1,000 all at once. And this is going to reduce the risk that you make an investment at the wrong time. Right now, the market is very volatile. Nobody knows if it's going to go sideways, up, or down. But if you dollar cost average, you don't really have to worry about it because history has shown that the market is going to go up over time. Usually it's about 10% every year over the long run. Now, if you do want to invest into any of these, definitely check out Moomoo down in the description below. They have a fantastic promotion going on right now. But also you can check out this video right here that I did on the best stockbrokers. If you haven't done it already, go ahead, gently tap the like button, hit the subscribe button, and ring the notification bell below, and I will see you next time.